So, apart from talking about Madonna's halftime show and the Giants' spectacular victory in the Super Bowl, everyone on Wall Street's also talking about comp. What else? They've got some new numbers to look at. They've got Lazard's results, which actually look like a big miss, but a lot of that is because they were apparently a bit more upfront about their numbers, their comp numbers. We also have Lloyd Blankfein's stock bonus. So, Anthony, you've been looking at the Lazard numbers.
Yep.
Okay, so the street is saying, what the hell? We thought something else was going to come along. What actually happened?
They complete the earnings expectation like 38 cents a share. They got 1 cent a share. Actually, if you look at what they've done, it's all about compensation. That accounts for the entire 38 cents per share. And what they do,
so the underlying business was okay.
Yeah, their revenues perfectly in line, tax rate, everything looks just about in line. What's happened with Lazard is what they do is they don't defer as much compensation to the following year. So as other firms, it's like 23%. And they can do that because they don't have a big trading arm or whatever. They don't need to worry about being seen to be not taking their money up.
Right, they're not putting capital at risk in the same way the other banks are, which is a reason you defer and have clawbacks and that kind of thing. This is M&A advice, fees that are coming in the door.
So they can afford to give their bankers more money up front now. Now that has a cost, of course, and in addition to that, you've got the cost of deferrals from previous years coming through. That went up 20% last year for them. So you've got more payments you've got to account for coming through from previous years, and also they're not paying back, they're not deferring bankers' bonuses that much into following years. So that combined meant that
but the point is,
but I don't understand why.
Well, the question is whether or not I mean, we don't know if this is happening, but I guess the implication is that potentially the other banks, the bigger banks, are using this deferral thing as a way to juice earnings. Because if you defer more, then you create a higher earnings.
You have fewer costs today.
It's very difficult to tell. I mean, Lazard at least breaks out pretty much all the numbers, including what they think guys who are leaving might end up forfeiting their stock at. So they've actually got a line in for that. They're very, very detailed for Wall Street.
Here's the question. Ken Jacobs is a good communicator. Why did he fail to communicate properly with the street and the analysts? Why were they ready for this?
Well, actually, one could argue that they already have. They said that we're going to be very consistent on deferrals. We're not going to increase deferral rates in the future, and they stuck to that. So arguably, one could argue the analysts didn't consider. They were all expecting Lazard to come in with a 59% ratio as they had in the first 9 months of the year to revenue, and it came out as 72 precisely because they didn't defer anything into following years. So the analysts kind of missed it.
But again, I think that is part of the.
They clearly anticipated something was going to go wrong on this, though. I mean, if you notice, like the way the items are footnoted, they're quite large. They're quite. I mean, they knew something bad was coming.
But they always do that. This is nothing new. They've been breaking out their compensation like this for a while. And they've said we're keeping deferrals at 23.5%. So if you can, and apparently analysts have worked out what the previous deferrals were going to cost. So something had to give.
All right. Well, let's turn quickly to Blankfein. So Lloyd Blankfein, CEO of Goldman Sachs, received a $7 million stock bonus.
Another Friday night drop.
Friday night drop from Goldman, and it's
at least
a bit of a tradition
too.
But it wasn't like a holy cow number, was it? I mean, it was quite. No,
I mean it was down. It was down about 40% from last year in terms of the stock-based component of it. Obviously, his base pay has gone up. It's tripled for him and for all the senior guys. And we don't know what his cash bonus is yet. And that's sort of the critical question.
Yeah, they keep that. For some reason, they leave that to the proxy, right? So you get the stock compensation now, just like last year. As Jeff said, it's down about 40-45%, the same as the stock went down last year, actually. If you factor in the increase in his salary, then his overall pay so far, compared to what it was at this stage last year, is down about 30%.
So he's done a little bit better than the Goldman
Beyond
shareholders.
the stock, though, the other metrics are not particularly good. I mean, ROE was pretty dreadful for Goldman. You have to question, what's going to happen with that cash bonus, whether he really deserves it.
Shouldn't really get it. Don't forget, considering the cash bonus, if he doesn't get one, he's going to be at half 2010 rate.
Okay, well, good. Thanks, guys. We'll be back with more Breaking Views tomorrow.